Okay, so it says on October 1st, 2011, Santana Ray launched a computer service company called Business Solutions. So that's coming from that first part, same background. And then what they want me to do is set up these accounts. Okay, so we have these accounts. This is what we call our chart of accounts. So that's like our company's listing of which accounts we can use. Okay, and they each have a number, and the number is an identifier. So the number doesn't have any dollar value. That number is just to identify the account. Okay, so if you kind of scan the accounts, you'll notice all the assets are starting with 1. Then the liabilities start with 2. They only have 1 liability. And then common stock and dividends, they're both equity accounts. They start with 3. Revenues start with 4, and it looks like expenses start with 6. Okay, so what we're going to do now is we're going to make a general journal. I'm going to call this my general journal. Okay, and it's a record. It's a database of information that's kept chronologically. So it'll be kept by date. Okay, and then you're going to have an account. I'm putting up the title, the headings to each column. And then real simply, right, I'll make a debit. Why don't I make this bigger? I'll make a debit. I abbreviate DR, debit. I told you why, right? You remember why it's there? There's no R in the word debit, right? But it's DR. It comes from the Latin word for debit. That would be a good, interesting thing to look up when you're surfing the internet. Find out why it's abbreviated DR. Okay, these will be my headings. And we're going to keep each transaction by date. Did you memorize your debits and credits? No. Okay. What, how the debit and credit affects each type of account? You got that solidified? Oh, not really. Okay, let me freeze these panes real quick. Freeze. Okay, now we can scroll like that and still have the headings up there. So just imagine, I'm going to take this first transaction over here. And you should be able to get it in your Laulima if you want to look at it on your computer. It says October 1st. So we'll date it 10/1. It says Ray invested $45,000 cash and a $20,000 computer system and $8,000 of office equipment in the company in exchange for common stock. So what I'm going to do is I'm going to debit cash. Okay, I'm going to debit the computer system. And you know what you want to do? You probably want to use the account titles that they have here. So they have something called computer equipment. That's where the computer system would go. Okay, so I'm going to book it to the computer equipment account, right? And then it says 8,000 of office equipment. So I have an office equipment account.
I have a question.
Yes.
Is there a specific order to that?
Is there a to doing that? No, but what you like to do is you like to put all of the accounts that you're going to debit, you like to list them first.
Oh.
Because what I'm going to do is with the credit, I'm going to indent. Remember, credits are on the right. So I'm going to indent the common stock account. Okay, so we're learning how to do some bookkeeping here. This is what bookkeepers do. They record transactions. Okay, so 45,000 will go to cash, 20,000 to the computer equipment, and 8,000 to office equipment. And then in exchange for that, right? S. Ray, okay, the individual that's putting these assets into the company is going to get common stock. So we got to show that common stock is outstanding. We credit the common stock account for the total of all of that. See how that works? Okay. Now, we might even have another column with account number. See. And you could put that account number there. I might reserve that column for when I begin posting. Okay, I might use that as a checkoff. So this account number column, as I post it to the ledger account, I could, in that column, put the account number in there to show that I put it in. And you know, your work doesn't just get finished in a day. You might be like halfway through this at 5 p.m. on Monday. It'll let you know where you left off, because the ones that you haven't posted yet don't have an account number in them yet. So that might be a good way to keep yourself organized. Go ahead.
You know, for the common stock, did you get that because you just added all of the assets or the things that the company owns?
Yes, I did. Yes, I did. Okay. Yeah. This is what was put into the company, what I have highlighted here. And in exchange for putting that into the company, this, I think it's a lady, right? S. Ray.
So would the accounts receivable fall in the common stock? No, right? Because you didn't
No.
get the money yet?
Common stock has nothing to do with accounts receivable. Accounts receivable are generated when we sell something
Oh, yeah.
and we didn't collect, right? We're not selling anything. In a way, we're selling common stock, but that's not our
I mean,
merchandise.
accounts payable, like if you owe something for an office equipment, you wouldn't add that to your
We don't owe anything.
Okay.
Okay.
But if you did owe, you wouldn't add it to your common stock, right?
No, no. Because common stock is ownership in the company, right? Now, if we borrowed money and we borrowed to buy this stuff, this common stock account wouldn't be here. That would be a note payable. And then we would have a liability, and we would owe money for the cash we borrowed, the equipment that we borrowed, and the office equipment, right? But in this example, an individual is buying ownership in the company in exchange for cash, computer equipment, and office equipment. So that individual no longer owns that stuff. The individual owns a piece of the company, which is the common stock. Okay? That's a good question. Now, you business majors that are never going to become an accountant, you're going to learn a lot about business in this class by going through these transactions. Because what is business about? Transactions, right? I was just writing this memo up. Every organization needs an accountant or accountants to keep track of these transactions, right? And you know these anti-business groups, the people march on Wall Street, whatever, right? Now, if they're going to become organized, they're going to need an accountant themselves, okay? So it's kind of ironic. They're anti-business, but they need a business person to help them keep track of their stuff. So this is a skill that you can take whether you're going to be in business that's for profit or whether you're going to be with an organization that's trying to take down the government. I don't know, whatever, right? You know what I mean? You're going to need somebody to keep track of your finances, okay? So it's good stuff to learn. I think just between you and me, my two courses should be like History 151, 152. Everybody should take it, right? Have to take it, right? But anyway, that's my soapbox for you today, okay? October 2nd, company paid $3,300 cash for 4 months rent, okay? So now this is interesting, okay? I'll do the cash part first, right? So cash is decreasing. We credit cash, right? Everybody got over that. They're comfortable with the fact that when I spend cash, I'm going to credit it. Okay. Now, if you pay for insurance in advance, that's not insurance expense. That's an account that we're going to call prepaid insurance. Is it rent? Okay. Rent. I'm sorry. Prepaid rent. Okay. So you've paid the rent in advance. That's an asset. It's going to be sitting there as an asset until the time that money covers. Remember, rent is expressed in time, right? You're paying for the use of a piece of property, a facility, over a time frame, right? It doesn't turn into rent expense until that time has gone by. Okay, so we paid for 4 months in advance rent. Is that right? You guys are looking at the problem too? Yeah, 4 months in advance, okay? So at the end of October, we're going to take 1/4 of this out of here and change it from prepaid rent to rent expense. We're not doing that just yet, though. We'll do it at the end of October, okay? So we got a balancing transaction, $3,300 to prepaid rent debit. That's an asset. That asset is increasing. And then our other asset, cash, is decreasing because we paid money out. Okay? Follow that? Yeah? Okay. October 3rd. I don't need to put the year in there. Company purchased $1,420 of computer supplies on credit from Harris Office Products. Okay. So what do we have? all of a sudden we have more office supplies. So I'm going to debit the office supplies account. Office supplies are an asset. They increase with debits. Okay, so we have 1420. Right? Now, whenever you see that phrase on credit, that means we didn't pay for it up front. That would be an accounts payable. Okay, so that's an example of about an iPhone. Are these things waterproof? You guys are iPhone? No. So it's not good to work out in them. Huh? Okay. Anyway. Okay, so what account do you think I'm going to credit? Yes, accounts payable. I'll go accounts payable. Okay, that means we owe money. If you go back to those debit and credit rules that you were looking at that we went over the other day, you'll notice that a credit to a liability is an increase to the liability. So now this company owes $1,420 more dollars. They're obligated. But they do have, now they own $1,420 in office supplies. Okay. Now we go to October 5th. Okay. The company paid $2,220 cash for 1 year's premium on a property and liability insurance policy. They're giving you a hint here. Debit prepaid insurance. It's kind of similar to prepaying rent. So you're going to prepay insurance. You're going to have a new asset called prepaid insurance. And because the word paid is in there, that means cash was expended. You're going to credit cash to show that decrease in cash. You guys follow me? Am I going too fast? Don't be afraid to say so. That doesn't mean you're slow. It just means I'm going too fast. Okay. Too fast? Your hand went up? No, okay. Stop me if I just ramble through this stuff, and then if nobody got it, then it wasn't effective. Okay, October 6th. The company billed Easy Leasing for $4,800. Okay, and it was because they performed services of putting in a new web server. Okay, so our company did the services, but we didn't get paid yet. Okay, we're gonna have a new asset called accounts. You guys know receivable, right? Meaning that, the real simple way I break it down, and it might not be the orthodox way to say it, is it's able to be received, right? We haven't received it yet, but it's receivable. So we're waiting to receive it, okay? And because we perform the services, we're going to have revenue. I would look up here at the chart of accounts and find what they call their revenue. Okay, so they're calling their revenue computer services revenue, account 403. Okay, so I'm going to, account 403, and they said that was $4,800. Okay. You kind of getting the idea of how I'm doing this? Anybody want me to rewind? Anybody kind of worked ahead? Kind of guessing how to do the next one? Okay, that's fine if you do that. On the 8th, the company paid $1,420 cash for the computer supplies purchased from Harris office on October 3rd. Just glance back at October 3rd over here in yellow. See, on October 3rd, that credit to accounts payable increased the liability. Now to decrease that liability, we got to debit that account. We do the opposite to it. So when we pay this account off down here on October 8th, we're going to debit accounts payable, and we're going to credit cash. Okay, they told us it was $1,420. That's the total. But sometimes you don't pay the total. Sometimes you make a partial payment. So it doesn't necessarily have to be the total that we charged, basically, right? We did it on credit. But in this case, it was. It was the full amount. You see what I was looking at? Okay. October 10th. Okay. the company hired Lynn Addy. Remember, we determined that just hiring someone is not a transaction. So we have a date in there. Since we have a date, I'll just say no transaction. And we'll move on to the next one. Okay, you don't even have to put that in there, but because we're in an academic setting and they have a date, I'm just going to put that in there to reinforce that that really wasn't a transaction. We hired the individual, but she didn't, I think it's a he, what's his name? Lynn, either way, could be a guy or a female. The individual didn't do any work, so there is no transaction. Okay. October 12th, the company billed Easy Leasing another $1,400. So that's just a carbon copy skeleton of that entry we did on the 6th, right? If we bill a customer, it's going to be a debit to accounts receivable and a credit to the revenue account. In this case, it's not the same amount. I think it's $1,400, right? $1,400. Okay. Now that kind of gets us to the point that we were at on what we did on Thursday by just analyzing the transactions. Now we've done the bookkeeping. We've actually done some accounting here. Okay, so you guys should like give yourselves a hand or feel good, because now you can, with some of these skills, you can go out and get a job making transactions in a company. You're getting closer to being employable in this field. Go ahead.
Can you scroll down to the October 3rd one? Did
Oh,
you
yeah.
change the text on that to
Did I make a mistake?
no, I think you did change it, but oh no, never mind. Okay.
October.
Oh no, okay, never mind. I'll just check.
Yeah. The one that I copied was October 6th. That's the receivable one, right? October 3rd is where we're buying. October 6th and 12th is where we're selling. You guys see that? So this is where we're buying something. These two are where we're selling something.
The only thing I was trying to get just clarify with the 3rd and then when you paid off.
Oh, okay. So yeah, those two are related. The 3rd is where we buy it, but we don't pay for it, right? And then the 8th is where we actually pay for it. Okay.
Oh, okay, because it's on the debit.
Yeah. See, that's reducing the payable account.
Okay.
Okay. Question.
On the second, where did that go?
The second.
Where you paid?
Okay, so we paid for the rent in advance,
Oh, there.
but the time that we are renting it for hasn't gone by yet. So it's going to sit there as the asset until the time goes by. Remember when we rent something, like if you rent your apartment or if you rent a house, you're renting it for a time frame. So you really don't have rent expense until you've absorbed that time, the use, until you've made use of that facility for the time that you're renting it for. So it sits there as an asset. That's an asset. That's prepaid rent. That's actually 4 months of prepaid rent. So it's going to sit there in that account until the time elapses. That's a fancy word for the time going by, right? Sometimes I think your computer says elapsed time. That's what that means. It's the time going by. Does that help you?
Yeah.
Okay, good.
Are you gonna upload that onto Audium as well?
Yeah, I will. I'll upload it. And what I'm trying is I got this new software on here, so it's kind of recording what I'm doing. I hope it is. I hit record, so maybe you can get the full effect, yeah? Okay. Now, where were we? Okay, that's what we did. But now there's more transactions than just that. See down here, they gave us the 15th forward. So we got several more to do. Okay. Check this out. Now, on October 15th, what does it say? The company, can you read that? The company? Yeah, you can see it. That's really what I mean. Yeah, you don't have to read it out loud. The company received $4,800 cash from Easy Leasing as partial payment on its account. Okay, so what happens? Receiving cash is a debit to cash. Cash increases by $4,800. And what account is going to decrease? Yes, accounts receivable, which is an asset, is going to be credited. Because credits decrease assets, okay? You see how the more you use this, the more that gets ingrained, the fact that an asset is going to decrease with a credit, okay? October 17th, the company paid $805 cash to repair computer equipment that was damaged when moving it. Okay? Go back and look at your chart accounts, right? It says we got repairs expense. So we can record a repairs expense. How do expenses increase? Debits or credits?
Debit.
Debit, right? So I'm going to debit the rear repairs expense computer. Okay, and they said $805. And what is the key verb in that 17th, October 17th? The verb there is paid, right? The past tense of pay. That means that they used money to pay for this computer repair, so cash is going to be credited. That means that cash is decreased. We used cash to pay for this, okay? On the 20th, 10/20, the company, again, they paid again. So you know already there's going to be some kind of credit to cash, right? The company paid $1,728 for advertisements published in the local paper. Let's look at our chart of accounts, okay? We have an advertising expense. So we're going to book that amount to advertising expense. By book, I mean I'm going to record in the journal. So I'm going to have a debit to advertising expense. Okay? And again, the word is paid. I hope that picks up on the video. It gives it a little windward flavor, yeah? The rooster crowing. Okay. October 20th paid $1,728. Okay? Is anyone not following it? It's a great time to ask. Okay? Okay. Because these are the basic skills to get before we move on. October 22nd. What does it say? The company received. So we're receiving $1,400 cash from Easy Leasing on account. So cash is going to be debited. That's an increase to cash, $1,400. And then what account do you think is going to be credited? Accounts receivable, because what's happening is Easy Leasing is making a payment on the amount that they owe our company. Okay? 10/28. Okay? On 10/28, the company billed IFM company $5,208 for services performed. Okay? So this is similar, but it's a different company we're charging. Different customer, right? We're charging IFM. You know, if you really wanted to be detailed about it, you'd indicate that that's IFM. And in a future chapter, they may require us to do that. Because what you end up having is you end up having subsidiary ledgers for each customer. But that's all going to total up into the total accounts receivable. Because you got to keep track of things by customer, so you know who to call when they're not paying on time, right? Okay. So we got accounts receivable, and then we're going to have that same revenue account that we used earlier. I got to go look at computer services revenue. Okay. So, 5,208. Okay. Now, October 31st. Okay. The company paid $875 for Lynn Addy's wages for 7 days work. Okay, now Lynn actually did some work. We have wages expense. So we're going to book that to wages expense. Okay, and because we paid, that means cash was used. How much did we pay? $875. Okay, see how that works? Okay. Now there's another entry on 1031. The company paid $3,600 in dividends. Remember that the dividends increase with a debit. Okay. Let's make sure they have they have a dividends account. Okay, and we paid. Okay, so we paid 3,600. Okay, and that's the end of October.
Could you leave it on the same line? Because it's the same line.
Could you leave it on the same?
Could I put like wage expenses under that, put dividend, and then add the cash credit?
Oh, you want to compound it into one entry?
Yeah.
Well, if it was one check,
Okay.
right? But these are probably two separate checks, right? This check goes to Lynn Addy, and this one goes to the dividends. Okay. So that's a good question. The question was, can we compound it into one entry, meaning have one credit to cash, and then one debit to wage expense, one debit to dividends? That would be appropriate if that cash payment is coming off of one check. But these are checks to two separate locations, okay? So normally what I would do, you know, they're making you go through 2 months, because November is next, right? You see November here? Normally what I would do is, I would probably try to post these transactions to the ledger, probably at the end of each day, if not at the end of each week. So we may want to go ahead and start a ledger, right? And get these going. And the way you would do a ledger is, let's see. Okay, probably on maybe on a separate tab, just to keep it separate. You'd have a different database called General Ledger, okay? And in a real academic form, it would look like T accounts, okay? So you kind of have something that looks like T's, and you would have a T account for each account that we have. So we could start with cash. Okay, what do we have? Accounts receivable. Okay, it's going to be a tedious process. And then you might even have the account number on these things. So cash is 101, right? Accounts receivable, why don't I abbreviate so we can fit that in? Accounts receivable is 106. So we would make one for every account that we have. We could even go a little smaller just to set it up. And I'll go ahead and set that up for you. Oops. So what else do we have? We have computer supplies. Computer supplies is 126. I'm abbreviating so it fits in that. Okay? And then you have prepaid insurance.
Okay, how do you make those two things?
Oh, you don't have to do yours in Excel. Let's see.
But how would you do it
How did I do it? Okay. What I did was I highlighted the area where I want the lines. So like in this case, I wanted a horizontal line. And then I went up here and I chose the line type that I want to use. If you want to get more detailed on it, you can bring up your right click on that area and then format cells, and then you can be more specific. You could have something going like at an angle. You know, you could put lines, something like that if you wanted to. So wherever you want to put a line, you find that area and then you go format cells. And this thing shows you how that cell is going to contain the line. And then you got line options here. But these are the generic ones, the standards over here that you can use. If you're an Excel kind of person, it's not required for the course. I'm just using it because it's nicer than my writing, yeah. Okay. But yeah, play around with it. That's how you learn Excel. You kind of fool around with it. So I'm going to make another account called prepaid rent. Okay. I'm gonna actually make one for all of the ones in the chart of accounts. So I got office equipment. Now prepaid rents account number is 131. Office equipment is 163. You guys are old enough to remember Arakawas out in Waipahu? No, okay. There used to be a store out in Waipahu called Arakawas, and they had all these sporting goods. But in their commercial, they had the rooster crowing. So, they wouldn't. You guys can't. Okay. Anyway. Accounts payable now. See, accounts payable becomes it's a liability, so the account numbers are starting with 2. You see, accounts payable. Yeah.
When we flip into the accounts, how do you like make it in the center of 2 cells?
Oh, how do you center it in 2 cells? Like, say you want to center your name across, say, 4 cells. Just type your name in and then highlight the cells that you want to go across. And there's this little thing here. It's called merge and center. When you hover your mouse over it, it comes up and says merge and center. You can click on that and then it'll center it across multiple cells. So, okay, common stock. That's account 307. Okay. Then we got dividends. That's account 319. Okay. Then we got computer services revenue. That's account 403. I'm abbreviating just so I can fit it. You don't have to abbreviate if you can fit it. Then you got wages expense, so 623. You got advertising expense, 655. Ah. Okay. What else do we have? Mileage expense. $676. Miscellaneous expense, $677. And finally, repairs expense, computer. So 684. And I'll just COMP for computer. Okay? So now we have what we call a general ledger. The general ledger is the record where all of your accounts are held. Okay? The actual accounts. Okay? And then what we're going to do is we want to post these transactions to the accounts. Okay? So let's see if I can kind of split this maybe. You remember how to do that? Now I'm asking you guys how to do that. Split the two sheets out so I can see two here. Window. View. Arrange. Wait. There you go. Okay, so I can look at my journal over here, and I got my ledger here, right? And this is kind of the way you would do it. You would start posting. So I would take this first transaction, October. Hold on. Okay. There you go.
If you press the window key and press like the arrow left or right, it'll split it.
It'll split it. That's a quicker way to do it?
Yeah.
Okay. I went through here and did this new window thing. Arrow key and left or right?
The Windows key and then left or right.
Oh, okay, the one with the window on it. Okay.
Yeah, you have like two separate windows.
I have to remember that. That'll make it easier. Anyway, now we're gonna post, right? Thank you. So we'll take the transactions here. Now, a lot of times you want to leave an extra column, so you can put the date in, right? So I got this October 1st. I'm gonna go 10/1, and I'll post it to my cash account, 45,000. You see what I did, right? And then over here in the account, on the journal side, I'll put account 101. That means I posted that 45,000 from the journal. Right here's general journal to the general ledger. Okay, and then if I was just looking at my general ledger and I was wondering, okay, what is this from? Well, it's from the October 1st transaction. I can trace it back to the journal and find it on October 1st. Okay, I could look through the journal and find it. Okay, now computer equipment takes on a debit of 20,000. Okay, so that's going to be, make it a little smaller. Did we skip and not put one of these accounts in? Here it is. Oh, we missed an account. Did we? I think we missed putting in an account. We don't have our computer equipment account, 167, or do we? We don't, right? Okay. Why don't we just put them in? So I'll put it down here. Okay. 167 is computer equipment. Okay. Now if I look back over here at my journal, I booked 20,000 to the computer equipment account. So we're going to put a $20,000 debit there. That's from 10/1. Okay. And then I got 8,000 to office equipment. Okay. So office equipment is account 163. Computer equipment was 167. Okay. And then we issue common stock a credit of 73,000. So we got to find the common stock account. Okay, common stock account 73,000 from 10/1. Okay. And that's account 307. Okay. So if I clocked out today and the day was over, I know that I've already posted this transaction. Come tomorrow, I can start with the next one. Okay, that's what this does for me. That's called a cross-reference. And there's several different ways to do cross-referencing. In this case, this looks like it would work. It might not be the way they ask you to do it in the problem, but this does a good cross-referencing, because if you were working from any one of these databases or these documents, right, you could trace back from the ledger according to date, and you could trace from the journal to the ledger according to account. Okay, that's what they do. They allow you to cross-reference. Okay, October 2nd, Prepaid rent gets a debit of 3,300, 10-2. And then over here, that's going to be recorded to account 131. And then cash gets a credit of 3,300. Notice, I don't skip a line. I just book straight into the credit column. It saves space, right? Because remember, when I'm going to get the balance in the account, I'm going to get the difference between the debits and credits. Okay, that's really all it is. Okay, can you see the ledger? Okay, this side. Okay, I have it a little small, but we can see the whole thing the way I have it. Okay, and the cash account is 101. Okay, we got a debit on October 3rd. We got a debit to office supplies. Again, did I leave an account out again? I did, didn't I? We didn't set it up correctly. Why don't we make sure I'm not making a duplicate now. I skipped over office supplies. I want to borrow this guy, and we're going to call this office supplies. You guys didn't catch me making that mistake. Okay. What account number is office supplies?
Because
There is no account.
There is office equipment.
There's office equipment, computer supplies. And I just put in,
that's the one you made up. Remember?
I made it up. What? That was October 3rd?
Yeah.
Oh, I called it office supplies. It really goes to computer supplies. You see that? Right? So I skipped. In my head, I went ahead and called something office supplies when it's actually computer supplies. So this entry here should have been computer supplies, right? Okay? So I changed it. I have an account for computer supplies, account 126. That's a debit of 1420. And that's going to be done on October 3rd. So 10-3. Okay. Computer supplies is the account 126. And then the credit is to accounts payable. Accounts payable is account 201. And that's for 1420. Right? And that was 10-3. Okay. That's account 201. Okay? Questions on that one? It's just that I called something office supplies when it was supposed to be computer supplies. Yeah. Okay, on October 5th, we have a debit to prepaid insurance. 2,220. I'm going to put that 2,220 into prepaid insurance, and that's going to be 10-5. Okay. Over here, I'll check it off as account 128. And then cash gets a credit of 2,220. Okay, and I'm going to check that off as account 101. Okay, on the 6th, accounts receivable gets a debit of 4,800. So that's 10-6. And that's account 106. Okay. And then computer service revenue gets a credit of 4,800. So 4,800, 10-6. And that's account 403. Okay, moving along. On October 8th, accounts payable gets a debit of 1420. So debit of 1420. At this point in time, if you just looked at accounts receivable, you could tell the balance would be 0, right? Because 1420 credit and 1420 debit, that zeros the account out. Okay. So at that point in time, the account would be 0. So that's account 201. And then the cash, it was paid off with cash. So 1420, 10-8. And that's count 101. Okay, no entry on the 10th. On the 12th, accounts receivable is debited for 1,400. Okay. And computer service revenue is credited for 1,400. Sorry. Almost put it in the wrong account. Computer service revenue is here, 1,400. Okay. Accounts receivable is 106 and computer service revenue is 403. Just to check off that we put it there. October 10th, October 15th, cash. So we debit cash. See, I don't have to skip a line. I just go right back up to the next debit line. 4,800. Okay, that's account 101. And accounts receivable is credited 4,800. And that's on 10/15. And that'll be account 106. Okay. October 17th, computer repair expense, or repairs expense computer, is debited for $805. Okay. And cash is credited for $805. Okay. So that's account 684. And cash is account 101. Okay. October 20th. Advertising expense debited for 1,728. Okay. You can see how the human error could actually affect this, right? So your eyeballs really have to be looking. I don't know if I made any mistakes yet, but you're pulling it over from the debit. You want to make sure you put it on the debit side of the account. Sometimes you get a little lazy and it just ends up on the wrong side. Okay, so you can see the margin for error here. Computer repair expense is account 684. And then we pay that with cash, account 101, and that's on October 20th for 1728. Okay. I can already tell that we're going to need more room in the cash account, so I'll insert a few more lines. Okay. October 22nd, 1,400 debit to cash. Okay. And a credit to accounts receivable of 1,400. Okay, 3 more to go. October 28, accounts receivable gets debited for 5,208. And computer service revenue gets credited for the same amount. Okay. So that's going to be 106 and 403. Okay. October 31st, wage expense. Debit 875. And cash credit 875. Okay. And then finally October 31st, dividends debited for 3,600. Where's my dividends here? Debited. And cash credited for 3,600. So that'll be 101, and dividends were 319. Okay. So what we've done now, right? We've done two things. When we put the journal entries into the general ledger, that's called journalizing. So that's the way transactions enter your accounting system. They enter through the journal. Right? This is the point of entry. That's how we get the transactions in. We do it chronologically by date. Now the second thing that we've done is we've posted the transactions from the general journal to the general ledger. Okay? So this is the accounting cycle. You're actually doing you could do this in a company, right? All companies do this, right? Now the next thing we're going to do is we're going to take the balances for October. Okay? So let's see. What was it? Windows button arrow. How do I put it all back on one sheet?
Oh, I don't know about that. I
Oh,
just know how to split it.
okay, you know how to split the two. Okay, view maybe, shoots. Arrange all.
Isn't it still on if you click the sheet on the bottom?
Yeah. I got two sheets going. I want to make it one sheet, but why don't we do that?
Copy the whole thing and then just pick up the sheet.
We'll just save it, right? What do we call it? 01, 24, 17 in class. Call it that for now. I figure if we save it, then if any one of them gets closed, we have it saved, right? Okay. So the next thing we do, the next verb, I guess, if you want to call it that, is we got to get the balances in each account, right? So what you normally do is you put a line in there. And what you do is you add up your debits and you add up your credits and you get the difference, okay? And the side that has more on it is going to be where you put the balance. Okay, so, right, I tally that up, I got 51,200 in debit, and I got 13,948 in credit. So you know that the difference is going to sit on the debit side because there's more debit. Okay, I'll do it real quickly here in Excel. I'll just add up my debits, and I'm going to subtract the sum of my credits. Okay, and my balance. My October right, my 10/31 balance is 37,252. So we would do that for all of our accounts. Okay? Kind of put a line through, and for the most part, assets have a normal debit balance. So it's most likely that the debit side of my asset accounts would be the side with more in them, right? Okay. You see how I'm doing that? Okay. This one's easy. You don't even have to mess with it. It's automatically, there's only one entry in there, but just, to be formal about it, sometimes we go ahead and just carry that down and show a balance that way. Okay? And that would be the same for over here, right? So some of these accounts only have one transaction. Real easy to get the balance. In fact, we could just kind of do that and put it in there. Okay. Now be careful when you get to the accounts that have credit balances, it's going to be a little different. Okay. Common stock has a balance of 73,000. You know what? And I can use that same format. Let's see what we got. Okay, computer service revenue, we've got several entries. They're all on the credit side, so it's just a matter of adding those up. And we just got a couple more to do. Wages expense. Okay. Advertising expense. Repairs expense. Dividends. And computer equipment. I think I got all of them that have transactions in them. I have balances for each of them. Okay. So what's the next thing we do? Right? We've journalized. We've posted. We've balanced the accounts. What's the next step? This is every accounting department.
The balance sheet.
Well, before we make a balance sheet, we're going to make a trial balance. Yeah? A trial balance is not a financial statement. It's just what it is. It's a trial to make sure everything's in balance. Because of our equation, the total of our debits should always equal the total of our credits. So we run through this worksheet to show that that's true. Right? We've got to prove it to ourselves before we make the financial statements. So why don't I do this, label it for you, right? This was the journal. The next one was the ledger. Now the next one we want to make, we're going to call the trial balance. Okay? Make a sheet called the trial balance. What was it? Windows arrow?
Yeah. I think you guys like split the windows first.
We got to split.
The view and then add a new window.
Okay. I think I got what I need right now though. You see that? So what you would do is you would, in a trial balance, what was the company's name? Oh,
Business solutions.
Business Solutions, okay. Okay, we're gonna label it, right? We'll call it business trial balance. It's not a financial statement, but we'll say October 31st. Did it give a year?
2011.
2011. Okay, and then you like to do your little centering thing if you want to. You can center it, and then center them all if you want to. Mine doesn't say October, it says October. Okay? So I work with a guy that pronounces October, right? Okay, so what you do is you list your accounts. So I'll go account number, and I'll go account. And then I'll have a debit and a credit column, okay? Before you can make the financial statements, we have to go through this step. Otherwise, we might not be in balance, and then we're going to be wasting a lot of time. So my first account is account 101, and that's cash. And it has a debit balance of 37252. I pulled it from right over here, from the balance in the account. You see that? Okay. And then I got account 106. And it has a balance of, well, put in the name, right? Accounts receivable has a debit balance of 5,208. And I got computer supplies, 126. And that has a balance of 1,420. You see where I'm getting the balances from, yeah? I'm just getting them from the balances that I have in the ledger. Okay. I got account 128. I thought, yeah, 128. And this is prepaid insurance. And that has a debit balance of 2,220. And I got account 131. And that's prepaid rent. And that has a balance of 3,300. And then I got office equipment. And that has a balance of 8,000. Now, remember I skipped an account and it's sitting down here called computer equipment. I probably want to put that one in the 100 series. So I'm going to pull that one up here, 167. And this is going to be my computer equipment. Okay? And that's 20,000. Okay. Then I can go over to account 201. And that's accounts payable. And again, watch your eyeballs because accounts payable should really have a credit balance if there is a balance. In this case, there is no balance. That should be showing on the credit side like that. Okay? So I'll just make that correction here. It's not a big error, but it should have been showing on the credit side. 0 though, right? Then we got common stock, account 307. Okay, that has a credit balance of 73,000. Then we got dividends, 319. That has a debit balance of 3,600. Then we got account 403, which is computer service revenue. And that has a credit balance of 11,408. I'm just pulling the balances from the ledger. Then I got account 623, 655, 676, 677, and 684. And those are all my expense accounts. 623 is wages expense. 655 is advertising expense. And 676 is mileage expense. 677 is miscellaneous expense. And finally, 684 is repair expense. And that's for the computer. Okay. So we're going to put those in. Wages was $875. Advertising was $1728. There's no mileage, no miscellaneous, and computer repair is $805. Okay. So we just pulled those over. That could be called posting to the trial balance. You might want to call it that. And then what we want to do is we want to get the totals, right? So we're going to get the total. Fingers are crooked, yeah? We got a couple more minutes. We'll tally that up. And this is where you kind of squeeze, right? Because you're thinking, oh goodness, I did all of that work. And if my debits don't equal my credits, then I got to go back and figure out why, right? We could have very well made a mistake. We did this so fast. So we'll do that first. And then hey, we got it, okay? So my total of my debits equals the total of my credits, okay? So you've done journalizing, posting, balancing, and then you've run a trial balance, okay? Now you can start making your financial statements. You have the data, And if you organized it in this order, making your financial statements is kind of easy because all your assets are the ones, any 2s are your liabilities, 3s are your equity, 4s are your revenue, and 6s are your expenses. So if you put a line right here, just like that, just for your organizational purposes, everything below that line is going to go on your income statement. That's actually your income statement in a real rudimentary format. So if we want to make the income statement, what's the name of our company? Business Solutions. Okay. So we can come over here and make another one, and we'll call this the income statement. Okay. Make it a little bit bigger. We'll call it income statement. And we know how to do this because it was in chapter 1, right? For the month ending October 31st. Was it 2011? I think. Yeah. And then why don't we can do that, and we just look at our trial balance, and we can start with revenue. So we got this thing called computer services revenue. Okay, and then we're going to have expenses. So we'll put our revenue right out here. Computer services revenue was 11,408. And then we got all of these expenses. We got wages. Actually, we only have 2, so we got 3, I'm sorry. We got this one, and this one. We only need to pull the ones over that we have. Okay? Because we're not going to show stuff with 0 in it on our income statement. So I'm only going to pull the expenses over that have amounts in them. Okay? And my expenses are wage expense, advertising, and repair. You remember how to do this, right? So I got total expenses. I'll tally up my expenses, so I'm adding up the expenses. And then you guys remember how to get the net income? Revenue minus expenses. Okay, so my net income will be that 11,408 minus the total expenses of 3,408. So my net income is 8,000. Okay. Now what's the next financial statement that I make? Statement of retained earnings. So I'll label this one income statement, and then we'll make another. Why don't we make another sheet? Yeah. Just go like this. Okay. And this guy we're going to call steal that word statement, and we'll just say of retained earnings. Sounds like the company was brand new, right? So we'll go retained earnings 10 October 1 2011. What was it? 0, right? And then we'll go add net income. Where am I going to get the net income? Income statement, right? So here's my income statement. I'll pull that 8,000 over. That's my net income. Then usually in a formal income retained earnings statement, you have a subtotal. So the subtotal would be 8,000. Seems kind of redundant, but that's the format. Add the 0 to 8,000. And what are you going to subtract? Dividends, right? Where am I going to find my dividends? Trial balance, yeah. Go back to the trial balance. I would work from the trial balance because I know that that's the right number. Dividends are 3,600, right? So I'll put in 3,600. And the word less means I'm going to subtract, so I don't necessarily have to. And this will be on 10/31. That's the ending. So 8, what will that be? 4,400? 4,400 is your ending retained earnings. Okay, now what's the final one? If you're, okay, I'll just go retained earnings statement. And then the final one we're going to do is the balance sheet. Okay, so I can kind of steal that title, come over here, and in 3 minutes we got to get this done. We're going to call this balance sheet. Okay, remember balance sheet is dated on a specific date, so to stress that I'll just say as of. Okay, what goes on the balance sheet? Assets, right? And then we got liabilities and equity. Okay, so what assets do I have? I can look over on my trial balance. I got cash, accounts receivable. I got several assets. Everything I have highlighted here, I just bring it over here. Okay, and that's going to be my total assets. Okay, if I add all of those up, so what do I have? I got cash. Okay, so the sum of my assets. See how easy it is if you keep your trial balance in order by the type of account? Then you don't have to go looking around. I mean, you could make a trial balance with assets, some assets here, some liabilities, assets all over the place. But if you keep it organized, it'll make life easier. I'm just going to do liabilities and equity together for our discussion. You would have them in separate sections, but what are my liabilities? I only have one, and there's nothing in it, right? So really, I have common stock. Okay, and what else do I need to put into equity? Retained earnings, right? Okay, so what is my common stock? 73,000. And what are my retained earnings? Where am I going to find retained earnings? Yes, the statement of retained earnings. So I'll just come back over here and borrow that 4,400 in ending retained earnings. Put it there. And then again, another drum roll, right? Because you're holding, making sure that you equal. And we do equal my total liabilities and stockholders' equity. Balance. My balance sheet actually balances, right? That's that. Any questions? I'll put the file into Laulima, and then somehow I'll try to see if I can get this video where you can get to it, if it recorded. Maybe I didn't hit the record button. Okay. What I want you to do, though, is there's some transactions from November. If you look at that document I gave you, you notice there's November 1st. Why don't you go and see if you can follow the format I used and record the November transactions, rebalance. So you're just going to add those transactions to the balances from October in your ledger. So you might have to make your ledger bigger. And then run through what we did. Make trial balance, make income statement, all the way through. See if you can stay in balance. And then we can look at that again, okay? And the way you get good at it is practice, practice. So keep practicing your My Accounting Lab stuff. And we'll see you Tuesday, yeah? Yeah?
Thursday.
Thursday. Oh, yeah. Oh, this is Tuesday, yeah? Okay. We'll see you Thursday. Okay? Yes, sir.
Can you check this out?
Okay. Wait, let me do something real quick. Maybe it didn't record. Ah, shoot. See, yeah, thank you.
Next time I'm gonna ask you something for the homework. I didn't understand why.
Okay,
Yeah.
yeah, we'll do that.
So,
Yeah.
yeah.
I guess it didn't.